Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show, One News Talk 780 KOH. It's a pleasure to be with you. One out of the two amigos are here. Mr. Cory Edge of Edge Realty. How you doing, Big C?
Doing awesome. How are you?
Good, man. Good.
Good.
Yo, that means Mr. Millard is off gallivanting,
Aboard.
rubbing shoulders, rubbing elbows. I don't know, some big event he had to go to. So, yes, he is not here with us. And we needed him tonight to talk about our topic, Cory. So you and I are going to have to just fake it. I think we can do it.
Yes. I've been through it enough.
Yeah, just a few thousand times, right? Our topic, speaking of which, after we get the stock market side of things going, how to turn the dream of home ownership into reality. I wish, Cory, I'm sure you would agree with me on this one. I wish we had $1 for every time a person, a young person especially, always young, but usually says, I feel the goal of obtaining my first home is out of reach. I don't know how to do it. I can't figure this out. I read all these stories that prices keep going up and up and my rent keeps going up and up. I can't get ahead. I can't save up the down payment. I can't. And we're here to tell you, you can. But once again, this is going to be a situation where you've got to follow a plan. And Cory, that's exactly what you've lined out for us this evening is, how do we do this, right? How do we go from point A to point Z to make that dream of home ownership? Because folks, we all know, we don't need to cover this again from the standpoint. One of the best ways that you can ever start to build your net worth is buying a home. Sure, you're going to have up years, you're going to have down years, but over time, real estate tends to go up in value, kind of like the stock market. And once again, it's time for you to start building equity. It's time for you to quit kind of throwing your money away in rent, although renting does work for a few people. But overall, you want to buy a house. Builders want to sell you a house. Mortgage lenders like Dwight want to give you a loan, but how do you do it?
Yeah. And I think one of the biggest things I see, especially with young people, is the emotional part of it, right? And the commitment part of it. So when you're a renter, you're like, well, if this doesn't work out, I can go back to mom and dad and give my 30-day notice and I'm out. Well, when you get a 30-year mortgage and you own something,
Yes.
That's a much harder thing to do. So specifically for young people, that's always the first hurdle to get over.
That's a great point.
And I remember, you probably remember the same thing.
I was scared to death.
My first mortgage was like $990 a month. I was like, oh my God, what? This is never going to work.
That's right.
But you kind of get there. I wish I had that same mortgage payment.
Studio apartment in Reno.
Yeah. So you get through the emotional part, but then yes, once you're through that, then you can sit down and start going through the steps, the budgets, the credit, the down payments, the meet with Dwight, the kind of all the minutia stuff it's not super difficult. It may not work the first time. And that's where somebody like Dwight's awesome because he'll say, hey, here's where you're at. Here's where you need to be. You're just a little bit off. Do this for the next 6 months or 12 or whatever.
Yep.
And you're right on your way.
Yep. No, you're absolutely right. And, speaking of Dwight, again, he's always made this offer to all of you as our listeners, and that is he'll do a free credit report, right? It's called a soft hit. It doesn't affect your credit. It doesn't show as an inquiry or something, but he'll take a look. And I've had him do it with clients. He'll take a look and go, okay, like to Cory's point, here's where you are. Here's where you need to be from a score, a FICO score standpoint. And most importantly, he's got the software that says, look, you need to, I don't know, let's do a hypothetical. You need to raise your FICO score by 30 points. Well, you may think, oh, geez, I got to pay off every credit card. I got to do this. It's not always the case, right? I've seen this with my own eyes with clients where he'll go, no. You don't need to pay off that, $7,000 Visa bill. You need to bring it down to $3,320. I mean, really, literally, they can get it down to the penny and boom, here goes the score going up. So there are so many things that can be done. But again, you have to have the right team. You got to have the Cory Edges of the world, the Dwight Millards of the world, us, because we're very involved in the whole homeownership also because we've got strategies to help people find that capital, right? If you aren't fortunate enough to be able to borrow money or get a gift from mom, dad, grandma, grandpa, GoFundMe, whatever you want to get the gift, we've got a lot of strategies we've used over the years that can really open your eyes and help you get that. I mean, Cory, again, going back to my first homeownership, I've shared this story a million times. I had to go into partnership with my father and my brother-in-law and my sister, but I borrowed from a 401k. I did, you kind of do whatever you need to do, right? Because it's like, I got to get in here. I can't keep throwing away this rent. I got to get in here. And that was back in the early 80s. I mean, or mid 80s. There's now so many more ways that you can do it. I mean, folks, you may not even know this, but if you have a brokerage account, a taxable brokerage account, the old days where you'd have to go in and do a margin which again has a lot of risk associated with it, that we now do what's called asset-backed lending. And if you have a taxable brokerage account with us, you could most potentially qualify. You got to have good credit scores, et cetera, that you can actually borrow, in many cases, 50% or sometimes more of your taxable portfolio account and use it for real estate or whatever you want to do. Those weren't around, Corey, these asset-backed loans. Those weren't around back in the early days when you and I bought houses together, our first ones, and so on and so forth. So that's my point. You can go against the 4K and so on and so forth. But bottom line is, if there's a will, there's a way. And we just want to say, listen to what we're going to have to say this afternoon. And again, you have to have the will. We'll show you the way to do it.
Absolutely. Yeah. And it's just, again, once you get through those first hurdles, and it's always going to be scary. I don't care what time. I mean, when you bought your house a long time ago, when I bought my, like, it was scary. You just kind of get
Every
through.
time I've bought, right? It's a different fear, but I mean, when I bought my ranch in 2010, I was terrified, right? It's like every time I've ever bought real estate, commercial or residential, it's like, oh boy, yeah, because it's a big commitment. That, like you said earlier, it's 30-year or whatever your term may be commitment. Yeah, it's amazing. It's
But
amazing.
usually over time, it typically works out. You
Yeah,
got to give it time.
I always tell my young friends or young clients that it's like having a kid, right? I don't know about you, but none of my kids were planned. There was all a surprise. And I remember looking and to my wife and I go, "Oh my God, how are we going to financially do this? How are we going to figure this out?" Bailey, my daughter, just pops up on the screen.
That was a surprise too.
Yeah, that exactly. Yeah, she was a surprise. And you go, how am I going to afford this? How am I going to do it? And
Yeah.
through
You
hard
just
work, the
do.
grace of God, et cetera, you find
Yeah.
a way. And that's, again, it's we sound like old men because at least I am. You look back and go, yep, yep, I worried about it. Kind of like what you say, Corey, don't worry about the things you can't control. Yeah, you worry about so many things when you buy your first home, have your first kid, these major life milestones, getting married. I mean, right, another
Sure.
major milestone. But somehow, some way, it's always worked out for most people.
Yes. Yep.
So interesting. All right. Well, I can't wait to get to that. We got what about 7 points I think you put together for us, Corey, on how to make this dream of homeownership become a reality. All right. Let's get to the stock market side. I've got some interesting things to talk about, Corey, and obviously you were not on the show yesterday, but for those of you that may have missed it, please go back and listen to our podcast because Jason and I and my brother, Dr. Dennis Sanchez, we talked about it because Mondays are always our AI segment. We talked a lot about the big news of yesterday, which was the surprise announcement that NVIDIA was going to invest $100 billion in OpenAI, again, the parent of ChatGPT, $100 billion investment to help build out a 10 gigawatt data center, right? And again, if you missed it, one of the highlights, we did the calculations. 10 gigawatt data center, that amount of power is equivalent to 4 Hoover dams, right? 1 gigawatt powers about 780,000 homes. So you're talking 7.8 million homes roughly that 10 gigawatts would power, right? It's a substantial amount of electricity and a substantial undertaking. And I made the comment yesterday, and we didn't get a chance to go into it. We made the comment that Corey, there's kind of some, and I hate to say this because I love NVIDIA, kind of aggressive accounting, at least from my standpoint. I'm not a CPA. Maybe you CPAs out there listening, maybe you're going, John, this is done all the time. But I've been around this block and I've seen how kind of aggressive accounting ends up coming out in the wash at some point. So here's what I'm talking about. Why did NVIDIA do this? So we talked about the term yesterday of circular accounting. Now, what is circular accounting? Well, I'm going to tell you what NVIDIA did. And my concerns yesterday when I shared this story with you have come true today because now all of a sudden you're getting a bunch of people on Wall Street coming out and going, this doesn't sound quite right. So what is circular accounting? Okay, so in NVIDIA's situation, we're going to give, quote, invest, give, whatever you want to phrase it, $100 billion, right? But what OpenAI had to do or has to do is they've got to turn around, Corey, and they've got to buy $100 worth of NVIDIA GPUs and chips and so on and so forth, right? So in other words, that 100 billion is going to go to OpenAI, but they got to turn around and invest it back to NVIDIA through GPUs. So it sounds kind of strange. It's like, well, wait a minute here. I'm financing, if I'm NVIDIA, I'm financing this entire $100 billion transaction. Well, sure enough, today, CNBC reported that several senior investors I don't know what that means, but several senior investors have raised concerns to clients that the deal resembles a vendor financing agreement. A separate CNBC report raised doubts around the feasibility of meeting the energy demands of a 10 gigawatt factory or plant, citing political and economic constraints. Whoa, Cory, what a difference. And so when this news started to come out today, we gained very substantially yesterday. Let's see, what was our gain in NVIDIA yesterday? Yesterday was, bear with me one second. I want to bring up my notes. Let's see, yesterday, come on, there we go. Yeah, yesterday Nvidia gained $7 and a penny on that news that broke about this whole deal, 3.97%. Today, Nvidia fell $5.18, 2.82% to 178.43. All on what I just talked about, and again, my concern yesterday. So I went a little bit deeper. So early this morning, in like the Cory Edge hours, the 4 o'clock hour, I started digging into this, and I came across a really fascinating story in the Wall Street Journal, and it went through this, Cory, in much more detail. And when we come back, I want to read some highlights to you about this, because it raises these same concerns, but there's even more to it, that the 100 billion really can be worth about 300 billion. And I'll tell you why that those numbers can make sense. And it's the way that the industry now is financing all these NVIDIA chips and GPUs and so on and so forth. So it's really, really fascinating that we'll, like I said, we'll take care of that when we come back. And then we'll get into our real estate topic once again, how to turn the dream of homeownership into reality. Let us turn it over to the wonderful Kristen Snow in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOAs with Cory Edge of Edge Realty. Dwight Millard of Highlands Mortgage has the afternoon off. All right, it was a bit of a tough session today. Worst level, we were down well over 200 on the Dow, rebounded a few times, but all that matters is where we close at 1 o'clock. We finished with a loss of 89 points on the Dow, finished at 46,292. NASDAQ gave up 216 points, 0.95%, and the S&P down 37 points, or 0.55%. Turning things over to the commodity side of things. Matter of fact, if you want to save me some time here, Cory, I forgot to bring up if you can go to Mortgage News Daily, let's see what the 30-year did. Let's see your report on that. Oil was a strong one today, $1.19 gain, 63.44 a barrel. Another substantial day in gold. Yesterday, remember, it shot up over 70, was it 75, 77 bucks, somewhere around there. Today, tack on another $36, closing at $3,513.80. And fairly quiet in the bond market, with the 10-year closing down 2 basis points at a yield of 4.12. We did have Chairman Powell today speaking. I don't even know what the event was, but the street picked up a little bit on this. His speech largely echoed his sentiments from last week's FOMC meeting. Market paid particular focus to his acknowledgement that, quote, by many measures, for example, equity prices are fairly highly valued. And I tell you what, Cory, as soon as those words came out of his mouth, I'm like, oh, no, 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 no. This is like a repeat of Greenspan back in 2000, right? Is irrational exuberance, meaning market's overvalued. Luckily, the market did not react in a real negative fashion to that. We already kind of down for the day on that one. But that's something we've got to pay attention to. If the chairman thinks the market's getting overvalued, again, equity prices are fairly, I don't even know how you put those two words together, fairly and highly, fairly highly valued. Those are some comments. Those are some hints that we need to pay attention to there.
But what is he? You've got stable inflation, stable employment. He always talks about two mandates, two mandates, two mandates.
Yes.
So where at what point does the stock market level come into his purview as far as
It's not supposed to, right? Those are the two mandates that you talked about. He's not supposed to be paying attention to the stock market, but of course they do. So what I've seen in the past with other chairmen, he's never really gone through a dramatic, strong bull market like we are in right now. Again, similar back to the dot-com era, where it's just record after record after record. So I don't know. All I can go off is what other Fed chairmen have done. And when they start, I'll use the analogy, firing the bullet across the bow of the boat, it makes everybody kind of sit up and go, wait a minute, the Fed is watching the stock market, even though they say they don't, and they're concerned about valuation. Because if the market gets richly valued, then again, their presumption is everybody is making money, If you feel good about your 401k, feel good about your brokerage accounts, what are you going to do? You're going to go out and you're going to spend. You go out and you spend. What does that do? It enhances inflation, right? So that's kind of their way to look at it. If the market's richly valued and people just keep throwing money in and money in day after day, and we keep setting records, that could lead to higher inflation. So I think that was his gist of saying that today. Like I said, this could have been a great excuse for the market to really sell off on those comments, but we'll see if this is the beginning of something, and see if you get another thing too. See if you start getting other Fed members talking about the same type of thing.
Sure. Yeah, no, that makes sense. And from the inflation standpoint, I see your point where if they feel everybody feels like they're rich, even if it's
Yes.
just on paper, then you're not going to slow things down. And they're already sitting on, in their mind, high inflation to begin
Yes.
with.
Yes.
So
Yes. Yes. Absolutely. Absolutely. All right. Let's go to this NVIDIA story again that was in the Wall Street Journal today. And once again, the stock finished down $5.18 after a big run up yesterday after announcing the $100 billion deal with OpenAI. But as I said on the show yesterday, there's more to this. And instead of me trying to just summarize it, this is not a real long article. So let me share this with all of you because it's absolutely fascinating. And it's a great learning lesson because we're going to hear more and more of these deals, I think, in my opinion, from NVIDIA and maybe some other companies to get these chip sales going and so on and so forth. And what you're going to find out is a lot of these companies, they're losing a significant sum of money. And so NVIDIA is kind of their knight in shining armor. So listen to this. NVIDIA, again, invested $100 billion into OpenAI to help finance a historic data center build out that has helped reset market expectations about the startup's shaky finances. Now, they're saying shaky finances about OpenAI. It's a familiar play by the chip giant. CEO Jensen Huang has repeatedly sought to leverage the enormous confidence investors have in NVIDIA's future to help strengthen the company's supply chain partners. It has used its balance sheet clout to keep the AI boom humming through deals, partnerships, and investments in companies that are among its top customers, including cloud computing provider CoreWeave, rival chip designer Intel, and xAI. The deal highlights an issue that some investors are calling circularity in NVIDIA's prospect, where the company takes steps to boost or shore up demand for its AI chips by supporting startups and other companies. Those companies can then use those funds or new liquidity to do what? Buy NVIDIA chips. So, Cory, listen to this. You're a math guy. For every $10 billion that NVIDIA invests in OpenAI, the startup will spend $35 billion on NVIDIA chips. So it's a 3.5x return for NVIDIA. Again, every 10 billion NVIDIA invests in OpenAI, the startup spends 35 billion on NVIDIA chips. That's according to analysis from New Street Research. That arrangement reduces NVIDIA's typical margins for cutting-edge chips, but ensures continued demand and offers a lifeline to cash-strapped AI companies. It effectively amounts to a discount for OpenAI. New Street Analysis said they expect NVIDIA to offer similar deals to xAI and other, quote, cash-constrained players. The OpenAI announcement alone on Monday added nearly $160 billion to NVIDIA's market value. Not a bad return, right? Cementing its ties to the leading software company of the artificial intelligence era. It also helped to silence those skeptical of how OpenAI would pay for the many multi-billion-dollar commitments it has made in recent months. Sam Altman, OpenAI's co-founder and CEO, told investors last fall that the company is set to lose, ready for this, folks, $44 billion through the year 2029. The year expects to turn its first profit. That was before OpenAI signed pricey commitments to buy chips and rent data center capacity from the likes of Broadcom and Oracle. What all these deals have in common is that NVIDIA, the world's most valuable public company, remember, as I said yesterday, folks, what, 4.3 trillion in market cap, is lending its name and financial firepower to smaller partners. AI executives expect the crucial development to give OpenAI access to much cheaper sources of capital than it had before. In the past, listen closely, in the past, when OpenAI has needed access to thousands of NVIDIA chips, it has done so through cloud service providers and companies known as neoclouds, which act as middlemen, paying for the development of data center clusters, buying the chips, and then renting them out for a premium. So renting them back to OpenAI. The debt used to underwrite deals for data centers often depends in part on the perceived creditworthiness of money-losing AI companies such as OpenAI. Listen to this, Cory. Interest rates on data centers closely linked to such startups have come in as high as 15% a proxy in the debt market for the risk investors see in AI business models, according to people familiar with the financing of such deals. Last paragraph, or last couple of paragraphs. Interest rates for project backed by the likes of Microsoft, for example, can range from 6 to 9%, the people said. Last week, credit rating agency, now this didn't make the news, Cory. Last week, credit rating agency Moody's noted risk to Oracle's balance sheet due to how much of its future AI data centers rely on OpenAI. The agency moved Oracle's outlook from stable to negative in July. NVIDIA, on the other hand, enjoys nearly unshakable faith from the market, which has sent its shares prices skyrocketing. The market confidence allows it to finance those infrastructure costs from its balance sheet or issue new equity to pay for them, a much less expensive financing option than OpenAI. Executives in the AI infrastructure space say that Monday's deal will likely reduce the credit risk of lending to the company, giving the firms access to lower interest rate loans. In addition to OpenAI, NVIDIA has made strategic investments in a number of large tech companies over the past year, often in the ways to strengthen its edge. NVIDIA owns a 7% stake in CoreWeave, a cloud service provider that rents out its massive data clusters to users like OpenAI, Microsoft, and others. Earlier this month, the two companies signed a $6.3 billion pact for NVIDIA to buy back any unused cloud capacity CoreWeave has through April 2032. See how these are all intertwined, Cory? And last week, NVIDIA announced it would invest $5 billion in Intel, a rival chip designer and manufacturer that has fallen badly behind in the global AI race. The partnership involves developing new products that will allow NVIDIA to more easily connect its GPUs to processors designed by Intel, giving NVIDIA a deeper footing in the personal computer market. So that's the reason Intel made that investment. In December, Elon Musk XI said NVIDIA was a strategic investor. In March, NVIDIA also joined a global AI partnership that includes XAI and plans to spend billions on AI data centers and energy infrastructures. So there it is, my friend. That's how this whole thing is shaping up.
So what I
Hold your,
don't
hold
go
your
ahead.
thought. Let me run. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Jack, welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory Edge. Once again, we finished down 89 on the Dow, lost 216 on the Nasdaq, and a decline of 37 on the S&P. All right, so Cory, real quick before we get to our topic again, how to make that dream of homeownership become a reality. The 7 great points that you put together for us. You want to make a comment on that AI story regarding the video?
Well, like you and I were talking about, it's just when I'm trying to figure out the math of it, right? So you have a cash-strapped company. I need to give you 100 billion so that you can buy $100 billion worth of my stuff. But somehow magically, I'm going to give you 100 billion and you're going to buy 350 billion
Yes.
worth of my stuff, even though you have no cash
Right.
of your own anyway. So I guess you and I are both like, what exactly
My
happened
point
there?
of bringing this whole story up.
I'm not sure.
Yep. This is my point of bringing the whole story up. I mean, my gosh, we could speculate for hours. You know, you can get into inventory financing. I mean, there's got to be some way, but essentially, you know, it's kind of like people always go, well, you know, how can XYZ brokerage firm charge zero commission? You know, some of these online firms. It's called deal flow, right? There's things behind the scenes that you, the public, you'll never see, you'll never know, because let me tell you, these online brokerage firms, they make money. Go look at the financials. They make a lot of money, and you're going, well, I pay 0% commission. You're paying just on the back end, right? Deal flow and so
They're
on and so
selling your
forth. So
information. Yeah.
they're selling your information. You bet. Like I said, there's a number of different ways you can do it. But yeah, Cory, to your point, there's got to be, the delta between, for every 10 billion, they got to buy 35.
So
Where's
let
that
me,
delta in between?
and I'm not making a direct comparison, and I was not around when this happened, but I read the books on it. Like this sounds very Enron-esque. Like all these, yeah, we're making a ton of money, but when they dug up everything, like, no, actually, you're booking a bunch of stuff that never actually really took place.
Or 2008, 2009. I mean,
Yeah, true.
that's what caused the crisis, right? And again, we're not making comparisons, but you know, my job is to always be looking out for our clients and our listeners, and is kind of question things, because to me, I don't know. And like I said, when I saw this article in the Wall Street Journal after bringing this up to the audience yesterday, I'm like, okay, I'm not the only one that's kind of questioning this whole deal, right? And there's always something more behind the scenes. You know, when Wall Street and major corporations are involved, there's always something more behind the scenes than what you're able to read. So who knows? Hopefully my worries are of nothing, but my fear is, as I shared with somebody today, I said, I just hope that unlike '08, when we woke up one day, and I've shared the story a million times, and the SEC changed the accounting rules, right? You had to do this thing called mark to market. And overnight, companies went from making X dollars per earnings per share to negative X numbers of dollars. And that started the whole cascading effect of the stock market selling off and then real estate and so on and so forth. I just hope something like that is not lurking with all of this big surge in AI. And again, this very aggressive accounting that's going on out there. Only time will tell. Only time will tell. All right, let's get to our topic this afternoon, which again is how do we make home ownership become reality? And, I want to say one thing too, Cory. We pigeonhole ourselves into saying, oh, this is just for the young people. But we've got to remember there's a whole bunch of people out there that maybe owned a home years ago. Maybe they had to short sale, foreclose, whatever, and they're just getting the credit rebuilt, right? They're just getting back in the game. I know it's typically 10 years, and we're well past the real estate crisis. But don't think that this is only for the young people, right? This is for anybody that wants to get into the home ownership game. So I just want to clarify that. Okay, Cory, you put together 7 points how to turn this dream into reality. Let's start with point number 1. Start with the budget.
And it's such a key, even before you meet with the lender. Like the lender's going to be the first step typically, but you need to sit down with your spouse, with your partner, with whoever you're going to be buying this with, or just with yourself if it's just you, and figure out how much can I afford on a monthly basis. And then one of the downsides of home ownership is when something breaks, guess who gets to fix it? You. You can call yourself to come over and unclog your toilet. So you have to somehow budget, and it's hard for anybody, young or old, to budget and say, well, I don't know how much it's going to cost to fix a broken pipe because I don't know if the pipe's going to break. But you have to have some kind of, I don't know, an emergency fund or some kind of account.
10% a good rule of thumb of
Yeah,
the value of the home. I mean, that's a lot of money. But
that's a lot of money. But yeah, I mean, it's hard. I guess I don't have a tried and true percentage number, but I was just talking to somebody this morning who luckily is a renter, but his pipe broke, his house was flooding. I'm like, you need to call your landlord and keep calling him. But if he would have owned that house, that would have been a huge expense. And then it goes back to, I'm going to call the insurance company. Well, guess what they're going to do? As soon as they fix it, they're canceling you. And now your next insurance company is going to quadruple your rate. So
yes.
you have to, and Dwight would say the same thing, if you can afford $2,000 a month mortgage because that's all you make, don't strap yourself to just the mortgage because you have to have extra funds to take care of the property.
And that's hard to do because, again, as we'll touch on here in a second, you get the pre-approval letter, right? And you go, oh, I'm pre-approved for whatever, 700,000. So I'm going to go right to the 700,000 mark. No. You don't need to do that. You shouldn't do that because of exactly what you said. You've got to have money for reserves. I mean, another factor that you have to look at is what is the age of the home that you're buying? What is the condition? I mean, it may be a 2-year-old home, but if it's been thrashed, you better factor for that. If it's an old home, you better factor for that. So there's a
I think
lot of
it's,
things, and that's, we're a good real estate professional.
and to the point that we have been talking about so far about this new AI thing, throw it in ChatGPT or throw it somewhere and say, new homeowner, what's my prospective budget? Because it's going to have, now you get to pay real estate taxes. Now you get to pay the garbage. Now you get to pay the sewer fee. All these things that as a tenant you never even knew existed. Well, now they exist. So you need to budget for them.
Budget is absolutely critical. Let's go to number 2, Cory. Check your credit.
Yep. So this is where if you've got your budget together and everything feels good, now you're going to go meet with Dwight or the lender of your choice and let them check your credit. So don't go, Dwight said this 100 times, don't go to the car dealership, don't go here and there and check your credit. Have the lender check it because for whatever reason, they're all different. And then they can sit down with you and say, hey, your credit is amazing. You can get a loan tomorrow. Or here's where your FICO score is. Here's all your accounts. We need to work on these too to get this down so I can get the FICO score up, and they can work with you. But the credit will tell you. And it's the scary part for people is it's not a yes, no. It's not like my credit's bad, now I'm out. No. It's always a work in progress. If it's not the best right now, it's easily taken care of over time.
You may qualify for a smaller amount because you got
Sure.
some dings on there. Or
Correct.
Like that.
Absolutely.
And remember also, I tell this to a lot of young people, don't think I had somebody come to me years ago and he was all excited because his Credit Karma score was like shot up like 50 points. Like, I'm going to go out and buy a house. And these lenders, to your point, they use a different scoring system. Even FICO is not really the predominant one. They all have their own scoring systems and algorithms and things like that. So go to the lender, like Cory said, go to the lender, let them pull it under their system, under their credit criteria, and they will be the ones that be able to tell you what to get. All right, when we come back, we'll talk about how to save for the down payment. Let's turn it over to Kristen Snow right now, Traffic Center. Kristen, welcome back to the Jon Sanchez Show on Newstalk 780 KOH. Mr. Edge, your phone number. Beautiful. All right, our topic, how to turn the dream of homeownership into reality, right? This can happen. You start with the budget. How much can I really afford? Don't just go off of what the pre-qual letter is telling you. Again, like Cory said, you got a lot of additional expenses you've not been used to if you've been a renter for a long time. Secondly, have the mortgage lender check your credit. Don't just go off of, some of the credit bureaus that you can get online. Check it with the lender. Next, saving for the down payment. I mean, there's a lot of options there. You can set up a separate, savings account, kind of a budget account where you go, hey, I'm going to set aside whatever, $200 of every paycheck, and it's going to go into, you don't want to invest it. You want to keep it safe and secure. So you're going to go into some interest bearing type of an account and save up, right? You have that target of what that down payment that the lender has told you they're going to need. Let's say it's a year from now. There's again many ways, and we'll do a show specifically on, or a podcast specifically on, saving for the down payment and the different options you have. Like, what are the rules to borrow against your 401k? What are the rules to borrow or take money out of your IRA? There's a lot of different strategies that I can share with everybody. Again, just know that there's, like I said, many options there. Cory, let's go to our fourth point, which is exploring the first time buyer programs, right? Dwight's mentioned this many times. There's a
Yep.
lot of different programs out there.
And it's always worth the question. And a lot of them are geographically located. So different parts, they don't blanket everything, but different parts of, let's just call it Washoe County, may have different programs. Some of them have more than one, some of them just have one. But when you're in talking to your lender, make sure you ask the question, because sometimes a good lender will bring it up to you. Sometimes they don't bring it up to you. And again, to your point, I think I'm right. Dwight can correct us on Thursday. First time home buyer means not having owned a home for the last 2 years. Doesn't mean it
Yes,
has
that
to
is
be
correct.
your
It is.
first home.
That's right.
So always ask the question, no matter what.
And I'm sure you got the email too. They just bumped up the conforming limit. Did you
Yeah.
see that email
Was
from him? So we'll let him handle that.
830.
Yeah. Big number. So that opened up, a lot of conforming loans to other people. All right. Get pre-approved, not pre-qualified, right? You as the real estate professional, there's a difference between those two. Explain it.
Yeah, so I think I may be getting some of this wrong. So hopefully Dwight, isn't listening in his car because he'll crash. But I think the pre-qualified is a simple, I don't even know if they pull credit at that point or if it's just the lender looking over stuff saying everything looks good, versus the pre-approved is pull the credit. Maybe they verify the income on, or maybe they don't go to that step yet,
Yeah.
but it's a much
It's
harder
going to vary a
inquiry, if you
little bit.
will. It's going to vary a little bit.
But from your standpoint, again, if let's say you're representing the seller, you want that buyer to have that pre-approved letter, not just pre-qualified, because again, now you've got a serious buyer, one that financially is serious and able to commit to whatever deal you finally end up.
I'll tell you what I do as a listing agent. If I get a pre-qual or pre-approval letter from a local lender and it's somebody like Dwight or some other people I know, then I'm good with it. If I get one from out of state, then I'm calling that lender. I'm going to ask them
Right.
questions. So I don't care what the top of it says. If it's not somebody I know, then I'm going to call and ask questions anyway. And that's, from a listing side, that's what you should be doing.
And if it's out of state, what are you going to
That's
do?
why I call and ask the lender questions. And they can't tell you all the financial stuff,
Yeah,
but I make
that's
sure
right.
you've pulled the credit, you've done the stuff. I'm not just going to take
Okay.
They spit out those letters by the thousands, John.
Sure.
So regardless of what it says.
Frankly, it's pretty easy to create a fake letter, I would imagine.
Yes, it is. Yeah.
All right. Final two. Work with an experienced realtor. I mean, that's what you are, Cory. I mean, that's why you need that experience there. And then don't skip the inspection. That's one of your favorite ones.
Don't ever skip the inspection. You're biting off a big chunk. You're committing to this property. You got 30 years. Everything we've talked about the whole show, the inspection for $300 or $400. Some people want to skimp there. That is the best $300 or $400 that you're going to spend, because there will be something wrong with that house that nobody realizes until the inspector finds it. A lot of times the sellers will take care of it as long as they know it's there. So it's worth every penny.
And remember, as the seller, you have the obligation to disclose everything, right? We've done a lot of
Everything
shows.
you know. If you know about it, you have to disclose it.
Yeah, absolutely. All right, there it is, folks. How to turn the dream of homeownership into reality. Bottom line, get the great team together, Cory, Dwight, etc., and make this dream become a reality, because it can be. And there's all kinds of great programs, like we said. So if you want more information, give Mr. Edge a phone call, and I'm sure he'll step right in and make this happen for you. God bless everybody. Thanks, Cory. This was a lot of fun. We'll do it again tomorrow on the Jon Sanchez Show. Have a great afternoon.